All right, so let us redo the video. So this is my outlook on XAUUSD today, which is Thursday, 23rd of July. Right now, time is 10:39 East African time, 10:39 a.m. And so we start with where price opens here. So you can see price opens around this place and then makes a move upside to sweep this liquidity and then makes a move to drop and gives us a break of structure. So the moment we have a break of structure, we know price has given us a bearish bias for the day. And as a result, this becomes the assumed high of the day, which also matches with the current candle formation for the day, which is this one. So you can see this is the daily candle chart forming right now as we speak. So the moment I am having a bearish bias as well is because we have another confluence giving us a bearish bias. So we have a market structure shift here after this liquidity sweep, and then you have a break of structure and then a second break of structure right here. And you can see price has given us a third break of structure right here, like that. So that is what is giving us another confluence to confirm to us that price is bearish for the day. And so as a result, what we want to do is, what you are doing is you're waiting for price to retrace to this side of the market structure and then drop. And as it is retracing, we are asking ourselves, where is it going to react from? So we looked at this fair value gap, and you can see price disrespected that. And then we looked at this breaker block, and this is where price respected. And we knew price is going to respect this breaker block because of the formation of a bearish engulfing candle from this zone here. So this area of interest becomes the area where price respects because of this bearish engulfing candle. So this pattern gives us a range. We call it the dealing range. So mark it from the range high to the range low and expect price to retrace to the premium side of the range and then drop. And you can see this is what price does here. So at this point, there's no need to do anything else. You just execute your sell trades, or even as price is forming, you can place your sell limits at this place. So you can see price comes to this zone right here, and taps into the premium side of this range and then drops. And you can see price, what this range helps us also to do is to frame our stop loss where it will go. So our stop loss goes above the high of this range, or above the swing high that formed as it gave us this engulfing pattern. So you can see that is where our stop loss goes, and it helps us now know exactly where our stop loss should go. So the next thing we want is price to dip into this premium side of this range and then drop. And as it does that, you execute your sell trades and you have your various stop losses. And you can see the final stop loss has been triggered just as we were recording this video. So the first stop loss would be here, which will give you around 4.5 R. This is a liquidity as shown by this setup here. This liquidity swings by lax algo, and then another liquidity is here, and you can see price also ramps through it like that. And then the final TP becomes this point here, which is a 15-minute order block, or what others will call demand zone on this side, and that becomes the